Welcome to today's crop insurance webinar presented by Cornell Cooperative Extension Lake Ontario Fruit Program. My name is Mark Wiltberger. I am Business Management Education Specialist for the Lake Ontario Fruit Program. Today's crop insurance webinar is titled Record Keeping and Preparing Your Farm for Apple Crop Insurance. Apple Crop Insurance Review. First, I will review apple crop insurance. These topics were covered in detail in another presentation titled Types of Crop Insurance Available for Apple Growers. I will review it here because the concepts are important for understanding what types of records need to be kept. In today's presentation, I will review what is crop insurance, who are the providers of crop insurance, and how does APH insurance for apples work? And then I will cover record-keeping topics. The record-keeping topics that will be discussed are: which kind of records do you need to keep? What information needs to be kept on the records? What kind of record-keeping systems are there? How are insurance units created? What are the advantages and disadvantages of creating smaller insurance units by choosing the variety group options? Which records are needed when you file a claim? What is crop insurance? Crop insurance is a policy that the farmer purchases yearly to protect their crop yield or revenue from production risk. Who are the providers of crop insurance? There are two fundamentally different providers of crop insurance: private insurance companies and the U.S. government. Federal crop insurance is provided by the USDA Risk Management Agency, or RMA. Although the insurance is provided by the federal government, the government uses private insurers to implement the crop insurance policies. For crops that are not covered under federal crop insurance, the U.S. government provides disaster assistance through the Farm Service Agency, abbreviated FSA. This program is called the Non-Insured Crop Disaster Assistance Program, abbreviated NAP. Types of insurance provided. What types of insurance are provided by these two different sources? Private insurers commonly provide what's known as single peril insurance, also called named peril. Instead of insuring against any type of peril that could impact a farmer's production, it provides insurance against specific types of peril only. Crop hail is a very common type of insurance from private insurers. Federal crop insurance from the USDA RMA is multi-peril insurance. It will insure against multiple types of peril. Part of the cost of the insurance for the farmer is subsidized by the government. And federal crop insurance is purchased via private insurers. Crop insurance for apples. Actual production history The most commonly used product type for apples is APH, Actual Production History. Actual production history policies insure producers against yield losses due to natural causes such as drought, excessive moisture, hail, wind, frost, insects, and diseases. The RMA Fact Sheet. The best guide for understanding crop insurance for apples is the RMA Fact Sheet. I recommend downloading the Regional Office and National Office Fact Sheet for apples. The Regional Office Fact Sheet is at this link, and the National Fact Sheet for apples is at this link. An image of the Regional Fact Sheet is on the right. It is from the Raleigh, North Carolina RMA office. This contains specific facts for states in the northeastern United States, including New York State. Finding a crop insurance agent. In order to purchase federal crop insurance, you will need to find and work with an RMA agent. An RMA agent is a private insurance agent who will provide the crop insurance. The RMA agent locator is at this site. The RMA agent will tell you the type of insurance product for which you are eligible. They will also assist you in setting up insurance units using the farm records you provide, which I will discuss in the second half of the presentation. If you are thinking of getting federal crop insurance or changing it, you should contact an insurance agent as early in the process as possible, as some of the steps, such as setting up your insurance units or calculating historical yields, take time. APH coverage levels. APH coverage levels are at 50%, 55%, 60%, 65%, 75%, 70%, and 75%. The higher the number, the more coverage you have. Note that the highest number is 75%. That means at the very minimum, you will have to bear the first 25% of a loss. In other words, it is similar to having a 25% deductible. If you choose a lower coverage, your effective deductible is higher. APH price elections. A price election is an established price used to calculate your premium and indemnity. For apples, the price election is essentially how much you are going to be paid for a loss of 1 bushel of apples. The term election refers to choosing among different options, fresh versus processed, or choosing a varietal group option. Contract pricing options are available for certified organic crops grown under guaranteed contracts. If you are growing organic apples, it is possible to work under contract pricing options. For price elections, see your state's actuarial documents at the Actuarial Information Browser at the RMA site, at this link here. When you go to this link, you enter into the form your crop, state, county, and other information, and the browser will tell you which price elections are available to you. APH insurance units. The insurance units are the building blocks with which your policy is built. They are essentially acreages of crop. Premiums, losses, and indemnities are calculated for each unit. Basic unit. A basic insurance unit includes all your insurable apple acreage in the county in which you have 100% share or which is owned by one person and operated by another person on shares. The basic insurance unit is all the apple acreage owned by you. Optional units. Optional units may be established if you can provide separate records for each unit and the acreage is not insured under a CAT or catastrophic policy. Optional units may be established by non-contiguous land, farm service agency farm serial numbers, irrigated or non-irrigated practice, or by type, fresh, processing, varietal group A, varietal group B, or varietal group C. Note, if you choose optional units, you must be able to provide separate records for each unit. We will go over the implications of this in a few minutes. When deciding what kind of unit option to choose, this last item by type makes a big difference. How your units will break out by fresh or processing or by varietal group A, B, or C will affect your premiums and indemnities and the probability that you will qualify for a claim. Apple APH insurance units. As we mentioned before, you will need to sit down with your insurance agent to demarcate your insurance units. Apple APH varietal group option. For the 2020 crop year, there are 3 variety groups. Varietal group A has very high value varieties with a high price election. The varieties are Honeycrisp, Pizzazz, and Sweet Tango Miniesca. Varietal group B has a long list of higher value varieties. And varietal group C contains all other apple varieties not specified in varietal group A or varietal group B. Varieties may be added, removed, or moved from one group to another by the RMA from one year to the next. Apple APH price elections. The price elections are what you will get paid for the loss of 1 bushel of apples. For the 2020 crop year, if you elect to create fresh and processing insurance units, you will be paid $12.50 for a bushel of fresh apples and $3.45 for a bushel of processing apples. If you elect to create varietal group insurance units, you will be paid $37 per bushel of varietal group A, $15 per bushel of varietal group B, and $11 per bushel of varietal group C. These prices are adjusted by RMA from year to year based on price history in the region. Loss example. I'll review the example calculation on the RMA fact sheet. Assume fresh apples with an approved yield of 600 bushels per acre, 65% coverage level, non-irrigated, 100% share, and a 1 acre basic unit. Starting at the top, approved yield per acre. This is the amount based on your production history that block of apples produces. You determine this by working with your insurance agent using your production history records. In this case, it is 600 bushels per acre. Coverage level. This is the coverage level you chose. In this case, the coverage level is 65%. Acre guarantee. The acre guarantee is the yield guarantee per acre. This is the maximum amount of yield you are guaranteed for loss. Acre guarantee is the approved yield times the coverage level. In this case, it is 600 bushels per acre times the 65% coverage level, equaling 390 bushels per acre. Production to count. This is a measurement of the amount of crop harvested or the unharvested amount appraised by the adjuster in the field. It is the amount of, quote, good fruit that is there in the field. Loss per acre. The loss per acre in this example is the amount of fruit that will be compensated. The loss per acre is the acre guarantee minus the production to count. In this case, the acre guarantee was 390 bushels. The production to count was 100 bushels. So 100 bushels per acre is subtracted from 390 bushels per acre. The loss per acre that is covered is 290 bushels. Price selection. The price selection seen here is the price selection for fresh apples. The fresh apple price selection pays $12.50 per bushel in crop year 2020. Indemnity per acre. The indemnity is the amount you get compensated per acre. The indemnity is the loss per acre times the price selection. In this case, it is a loss per acre of 290 bushels times a price election of $12.50. So in this case, you would get paid an indemnity of $3,625 per acre. Apple APH insurance units, record keeping. You will need to have a system of recording your production history for the types of insurance units you choose. Type of insurance unit options over which you have some choice are the basic unit, fresh versus processing units option, and the Varietal Groups units option. Are you going to get just basic units, fresh and processing units, or are you going to break your fresh units into Varietal Groups A, B, and C? Changing from fresh and processing insurance units to Varietal Group insurance units may entail significant increase or change in record keeping practices, but it may increase the probability of being able to claim an indemnity under certain circumstances. Insurance units. The criteria under which insurance units are determines the types of records and level of detail necessary to set up optional insurance unit. In the regional fact sheet language here, we see that one must have separate records for each unit. Types of records. So now we'll discuss the types of records that you would need to set up these insurance units and your insurance policy. Types of records you will need to implement crop insurance are farm maps, block records, harvest records or picking records, bills of lading. Those are the records of shipping from the field to storage or pack house or retailer. and your records of your returns. Farm map records. Maps of all farms. These can be simple hand-drawn maps. You can work with the insurance agent later to create digital maps and measure acreages for units. Location of farms. Which county is the farm in? Which farm service agency farm serial number applies to it? Again, you can work with the agent to determine farm serial numbers. Block locations on map, identified with some kind of ID. So when you draw the blocks on the map, you can identify those block locations with some sort of a label to identify which block it is. And then when you draw the blocks on the map, the varieties in each block is useful to note there so that at a glance you have a reminder of what's in that block in addition to the ID for the block. For crop insurance, maps of blocks are essential to comprise each insurance unit. It's important to draw the blocks on the map because one of the criteria is whether the land is contiguous or not. So by drawing everything on the map, you can see what's contiguous and what's not. Block records. It is essential to track records for individual blocks because the definition of your insurance units may change over time. By tracking individual blocks, you can create historical production records for any type of insurance unit. The information that you need to record for crop insurance correspond to the criteria on the regional fact sheet. So some of the information you would want to record for your block is listed here. You would want to list your block ID so that you can locate the block on the map. Of course, you would want to put the variety, which variety is planted in the block. The location on the farm map. When you write the block ID on the farm map, you've noted above, you will be able to locate the block on the map. The area of the block or the acreage. This is essential information to have to create the insurance unit. Whether the block is processing or fresh. Whether the block is irrigated or non-irrigated. Whether it's bearing or non-bearing, this is important for your production records. The density of the block, the spacing, the row width, the tree spacing, or the number of trees. This isn't essential, but it's good information to have to understand the yield numbers that you get for the block. And for some blocks, you may need to keep track of rows, individual rows. Different varieties you may have pulled out part of a block, a few rows, and planted a different variety. You may have done some top working and grafted over another variety over the same roots and tree. Oftentimes blocks are not homogeneous. It's good to have notes about any special circumstances of the block. Useful optional data for block records. The history of the block, the year that it was planted, what leaf the block is that current year, And it might be useful to put last year's yield down or a projection of this year's yield to get an idea of the general productivity of that block. The next kind of records, harvest records. Harvest records are the records you take on the day you pick the block. So it's important to track your harvest records by block. Record each block when you harvest it. So that would mean on the harvest record, writing down the block ID. Of course, you would put the variety picked. The harvest date is important to have. The harvest crew is not essential, but it's a good record to have. It may help remind you of what occurred on that date. You may need to keep track of rows, as I mentioned before. And then you would want to record the total number of bins picked for that block. This is an important number to have. I'm sorry, there should be the number of bins picked on that day of harvest. Bin tags. If you have a tag system, you could record all of the tags that got picked on that day. And then bill of lading numbers, which I'll talk about in a minute. Recording the bill of lading numbers after the apples have been shipped off for the day, recording the bill of lading number of each shipment that occurred on that day is a good thing to write down on that harvest record for that day, because that will connect the bins harvested to the truckload, and that connects the harvested fruit to the destination, which is important to have for filing a claim. Harvest production history records. Production history records. Production history records are your harvest records for previous years. You need to establish your production history according to the rules that are outlined in order to set your approved yield. You work with these records with your insurance agent to set the approved yield. The history could be recorded on a single page for each block, or a spreadsheet could be created to summarize the production for each year. So on the production history, you can record the block, the year, the variety, processed or fresh, total production for the year, yield per acre, and the final disposition. The final disposition is where the fruit was delivered. When making a claim, this is important information to have a record of. Notes on changes from prior year. You could record some notes on why the yield was different from the previous year. And any other notes, whether it changed from non-bearing to bearing, or whether any other change had occurred, grafting, or so on. As before, you may need to keep track of rows if you have different varieties growing in the same block. And for crop insurance, your production history is used to determine your approved yield. Also about production history, for crop insurance, it is essential to track by block. Insurance units will change. as varieties are added to variety groups by the RMA, or when you change your block, you install irrigation or you replant and you change the criteria of the block. So to be able to reconstitute insurance units for your production history, you need to be able to assemble the production history from the new combination of blocks that make up that insurance unit. The next type of record, bills of lading, shipping records. This is a record of what was harvested, how much was harvested, and where did it go. It's usually done by truckload. And on this record, you would want to have records about the bins that went on the truck, the variety that was in the bins, which block it came from, the destination, typically the name of the packing house, the number of bins harvested for each variety. And if you use a bin tag system, you could write down all the bin tag numbers, and that would also record that information of how many varieties, how many bins of each variety were in that shipment. And then it may also be useful to have some other notes on that, what the purpose of this is. Is it going for immediate packing or short-term or long-term storage? For crop insurance, it's essential to record the block for verification of production later in case of a claim. These records are important for tracking final disposition. And the next type of record, your returns. Returns are your sales receipts of packed fruit. The returns will have different amounts of information depending on the packing house. At the very least, the return will tell the type of apple variety. Good bill of lading records and packing house records will connect to the block. And very good packing house records and bin tagging system may connect to the bin. For crop insurance, the returns are essential for verification of the final disposition of the fruit when you file a claim. And also, the pack out rate on the return will confirm production to count. Different types of record keeping systems for these records. Possible ways to track these records are paper, spreadsheets, and production management software. Pick the type of system that works for you. If you use a paper system, creating standard forms for use in the office or field will make life easier. You can create standard forms with blanks in them on Microsoft Office and print them out and then fill them out in the office or in the field. This will save you time. The same is true for spreadsheets. Creating standard spreadsheets where the information is always located in the same place from spreadsheet to spreadsheet will make it easier to create new spreadsheets and save time recording your data. The third type, production management software, connects all the data together and eliminates the duplication of record keeping. To date, There are few production management software packages that serve all the needs of specialty crop growers and also are affordable for medium and small farms. Creating insurance units. To create insurance units, you will need to work with your crop insurance agent when setting up your policy. The crop insurance agent will have software, digital mapping, and databases, or the agent will use paper maps and forms. Together, you will map out and measure the acreage of each insurance unit. If you have your blocks documented, you can then assemble those blocks into insurance units. Creating insurance units. On the left is the language for the criteria from the regional fact sheet of what constitutes an insurance unit. With your insurance agent, you will group blocks together with similar criteria into insurance units. If you choose to use the varietal group options, you will most likely end up creating more insurance units, and the units will be smaller with fewer blocks. So over here on the right is a schematic. You have all of your blocks laid out here, block 1, 2, 3, 4, 5, 6, 7, 8, 9. And then blocks with the same criteria are being grouped together into insurance units. So this might be a processing block, and this might be a fresh block. Or if your fresh blocks are broken into varietal groups, this could be varietal group A, varietal group B, and varietal group C. So you see that if you just have fresh insurance units, that would encompass all of these blocks and be a larger unit. Whereas if you break it into varietal group A, varietal group B, and varietal group C, you will have more units and they will be smaller with fewer blocks in each of them. So there are some possible advantages of having smaller insurance units by choosing the variety group option. For very localized yield losses, the smaller the insurance unit, the better. For example, a hailstorm causes 100% loss in 2 of the 20 blocks in an insurance unit, but hardly touches the others. Even if you have very localized yield losses, even if you have a high loss in those 2 blocks, you may not exceed the threshold for an indemnity with the 20 block insurance unit, because your total losses for the entire insurance unit would only be around 10%. So you might not receive an indemnity because you didn't exceed the threshold, or at the very least, you may receive a lower indemnity. However, if the 2 blocks constituted their own insurance unit, you would more likely exceed the threshold for an indemnity. Another advantage of smaller insurance units with the varietal group option is that varietal groups more accurately reflects the value of your crop. If you have high-priced variety group A and variety group B varieties. Disadvantages of smaller units with variety group option. Could be more record keeping. That's possible, but maybe not, because it is a good practice to track your production by block anyway. And you will need those records regardless of the insurance unit option. Does it take more time to set up? Yes, perhaps. Perhaps there would be more frequently be changes from year to year as variety group definitions change. Will you pay higher premiums? Well, if you have a lot of variety group A and you don't want to protect against the liability for the full value of those high-priced varieties, you may not want to implement the variety group option. And then another possibility, that almost all of your varieties are in variety group C. So your price selection is lower than the fresh price selection. If this happens to be the case, you might want to stay with the fresh price selection. However, there are a lot of varieties in group B, so I think it's not very common that most varieties at a farm would be planted with only variety group C. Filing a claim. So some records you will need when filing a claim: the crop appraisal record from the crop adjuster, and there are rules about when the crop needs to be appraised. If you think you have a loss, you should contact the adjuster as soon as possible to understand those rules. Harvest records. If you do end up harvesting, records of how much was picked. Bills of lading. If you do end up harvesting, where the fruit was sent. And then also, if fruit is harvested, your returns. It verifies the final disposition of the fruit, and also the pack out rate may contribute to the pick to count or production to count figure. These are important for you because the pack out rate may be lower than the amount of fruit that was sent, and so your loss would be greater and you might qualify for a higher indemnity. As you can see, there is a bit of time and work involved for setting up your insurance units and keeping records that are useful for making a claim for crop insurance. The sales closing date this year is November 20th. Talk to your insurance agent to find out what records you need to provide by that date to have insurance for the coming year. So some of the dates: sales closing date, November 20th. Production reporting date, January 15. Acreage reporting date, January 15, 2020. Premium billing date, August 20th, 2020. And the end of the insurance date, November 5th, 2020. Even if you choose not to change your insurance for the coming year, after talking to your insurance agent, you'll have a better idea of what actions you may wish to start now to set up insurance for the following year. Additional information on crop insurance is at the Cornell Crop Insurance and Risk Management Education Project Resources website at agriskmanagement.cornell.edu. This presentation was made in partnership with the USDA Risk Management Agency to deliver crop insurance education in New York State. My name is Mark Wiltberger. I am Business Management Education Specialist for the Lake Ontario Fruit Program of Cornell Cooperative Extension. Thank you for your time and attention.